And then there's also the title insurance. There's a title H7 title, owner's title insurance optional. Rarely do you buy a house without title insurance. That basically ensures the buyer that the seller has a right to sell the property to you. You don't want to buy a house from somebody who's pretending to own it, that's just a tenant in the property. You want to make sure that whoever's signing that paperwork really has the right to sell the property to you, and that's what the title insurance does, is it ensures you that the person selling it to you is the owner and has the right. There's many legalities involved in that, and I could do a whole hours of training on what issues could come up with the title insurance. Okay, so that gives you an idea of the lower section, other costs. Now the title insurance binder, these are things, I mentioned that earlier, and I'm not sure why they have it in two places here, because the title insurance is going to be ensuring you that the seller has the right to sell the property to you. Then there's a lender's title insurance. So whenever you get caught, if you have a loan, again, if you pay cash, this isn't an issue. It doesn't need to be paid for. But if you have a mortgage, your mortgage company is going to want to have a rider added to your title insurance policy that covers them in case, let's say you buy the property and the previous owner didn't disclose to anybody that he had gotten married and then he got divorced, and the title search didn't show up, and it's a common law state, that ex-wife could come knock on your door and say, this is my house, get out, and you'll have to do it. But the title insurance, if they missed that and didn't put it as an exclusion to the policy, then they'll have to pay you back for what you paid for the property. Anyway, the title insurance binder for the mortgage company is to ensure them that you have the right to own the property.